Hi everyone, thank you for joining us today on your Lifestyle Broward channel. Today we're going to talk about what is a private money lender and what is private money lending. Okay, my name is Marcel Davis. I have over 17 years experience in the mortgage lending industry. Private money lending, as the name suggests, is an individual who has substantial amount of capital to lend to other individuals for purposes of securing real estate property. Now, the reason why most investors go with private money lending is faster than traditional bank. Traditional bank typically takes about 30 days to secure a mortgage. With a private money lender, you could secure a property in as little as 5 days. Okay. For me as an investor, my first investment property, I used private money lending. I was able to beat out a lot of people that were cash buyers. And at the time I was 21, 22 years old. Did not have a whole lot of capital, but happened to find a property that was 60% under market value. So it had 60% equity from the start. It did need some work, but it has so much equity in it, you could still get the work done and have 40 to 50% equity still in the property. So I was able to secure a private money lender to secure the funds to close on the property and have my first investment property. So this is a topic I'm excited to share with you because it does work. Once you do your numbers, once you do your due diligence, it does work. So we're gonna dive into this, and in a nutshell, you kind of understand it already. So what a private lender does and the advantage of using a private lender. Okay, so stay. Now we're gonna dive into what are the requirements for a private money lender. How do you secure a loan? Can you secure a loan? Okay. So credit requirements. Is credit required? No. Credit is not required, but credit does help. Typically, with private money lenders, the interest rates are 3 to 4% higher than the traditional mortgage. But with credit, or good credit, you can get a slightly lower rate than if you have no credit or bad credit in the private money lending space. So it gives you more leverage to have more savings each month by having good credit. But with bad credit, no problem. You can still secure a private money lender. Okay? Even though someone has bad credit or no credit and are able to get a private money lending mortgage, they cannot have any judgments or tax liens or anything of that sort against them, because it's oftentimes it can be transferred to the title of the property being bought, and it's a hassle and it has to be paid before the property is sold. So oftentimes up front, the lender will tell them, look, you gotta take care of this judgment or you gotta take care of this tax liens before we lend the money. So just a word of caution, anybody out there has any judgments, tax liens against them, that has to be resolved before securing a private money loan. And they'll check, okay? All right, so income requirements. Now, private money lending is very deal specific. So it all depends on the property that you choose. What are the income requirements for that specific property? Let's say you have a single family home, an apartment building, or a condo that already has a tenant in it. And let's say the tenant has been there for over 2 years, is steady, pays on time, and everything like that. They're able to use a percentage, often up to 75% of the rent, gross rental income, as an income for the borrower. Let me say that a different way. let's say the gross rental income on the property is $1,000 a month. The lender oftentimes will credit the borrower with $750 off that $1,000 as a borrower as a income for the borrower. Okay, so this gives an advantage if somebody's working a 9-to-5 job. The income is not that high. With using the gross rental income, at least a part of it, they can help qualify them for that specific property. Now, let's say a property is vacant, or let's say a property is not in the shape to be rented at this time. You could also use the projected rental income to qualify for a hard money loan. Because remember, the gist of hard money lending is this: equity. Property has enough equity, the lender will feel more secure, more safer in doing a deal for the mortgage because they have secured themselves with the equity portion of the deal, and you also have a deal where you have an advantage of making 30 to 40% on your initial investment, right? So it works for both parties. Now, experience. Does it matter to have experience before approaching a private money lender? It helps. If there's some private money lenders only work with borrowers that have an experience, and there's a lot of private money lenders that will work with someone with no experience. If the deal is right, they'll do it. If there's enough, what they call it, meat on the bones, where there's enough equity to go around and the property is in a good location, it's a no-brainer. Most lenders will do it. So experience does not count at the end of the day because there's enough lenders out there that will work with someone with no experience. Okay, there are different types of loans, but I'm gonna give you an idea of a typical hard money loan. Okay, a typical hard money loan is normally 1 to 2 years. I've heard hard money loans or private money lending going as far as 5 years, 10 years, 20 years. That does happen, but I want to tell you what normally happens. Normally 1 to 2 years is normally for an investor to get in, fix the property, flip the property, or to get in, fix the property, and then transfer to a traditional mortgage once the property is in a marketable shape, right? The interest rates in private money lending is normally structured in the form of an interest-only loan. So interest only, meaning, let's say you borrow $50,000. The house is worth $100,000. They do an interest-only loan, saying they want 10% interest only. The money that you pay each month will not apply to the original principal balance of $50,000. That money will just apply to the 10% interest which they are charging for doing the mortgage loan. So that's often why it's a 1 year to 2 year deal, because it's just making a way for the private money lender to make some profit, and also for the investor to get in the house, fix the house, and unload the house, right? So that's typically the scenario for private money lender, interest only rates. Are there private money lenders out there that does principal and interest mortgage? Yes. But at the same time, this doesn't normally happen because, like I said, for a private money lender, the rates are normally higher, and for it to be worth it for a private money investor, they have to charge a higher interest rate. Just think about it. If someone is an investor and they have $200,000, $300,000 to invest, they could invest in stocks, bonds, get 8-9% back of their money, and it'd be less risky instead of putting it into a property that they do not own or lending out to someone. So for it to be worth it for them, they have to charge normally 10, 11, 12% for the deal to be, good for them to do it. So just bear in mind that this is a short-term thing. You have to do your due diligence up front. Check everything, cross your T's, dot your I's to make sure that it's worth it. All the money you're investing, the interest rate you're being charged, and you do have an exit strategy for each project that you undertake. Okay? Rehab loans. Do the hard money or private money lender give funds for a rehab loan? Yes, most companies do, and it's mostly the company that will work with clients that has some credit, because here's what happens when they do a rehab loan. If they lend for the acquisition, let's say they lend $50,000 to acquire the property is worth $100,000, and then they have to give another $20,000 out to the borrower to do rehab on the property. Now we only left with $30,000, or in other words, 30% worth of equity. So it's a higher risk. Again, we're talking risk when it comes to banking, lending. It's all risk management. Okay, so it's a higher risk for them to lend $70,000 versus $50,000, right? So yes, you can get a rehab loan. It normally asks the borrower to get a contractor to go out there after an inspection and see what it would take to repair a property. And if the numbers make sense, they will give you a rehab loan on top of the acquisition money for the property so you could get the project done. They normally do this in draw series, DRAW, draw, where they would say we have 4 draws to give out. The first stage of the project, the second stage, the third stage, and the final stage. So you have these benchmarks to meet on the project to complete the rehab in order to sell the property. So they will come out and check on your rehab progress. They will check in with the contractor. It's important a borrower and investor meet those deadlines to complete the project in a timely manner. The quicker you complete the project, the more money you make, obviously, because the less you pay out for mortgages, the less you pay out for maintaining the property. So oftentimes, get in, fix the property, flip the property, right? That's the ideal situation. Now, another thing that's important to point out with private money lenders is oftentimes they'll ask the borrower to close the property in an LLC. What does that mean? So let's say you're John Doe. They don't want to lend the money to John Doe. They want to lend it to John Doe LLC. And the reason why, again, risk management, banking, always think risk management, is that if they lend the money to John Doe, what happens is there's a law, we won't get into that too much, but there's homestead laws that prevent a bank to foreclose on a property or default on a loan in a timely manner if it's a homestead property. That means if it's your primary residence. That means if the property is in your name as an individual versus an LLC, oftentimes a primary residence, right? So they prefer a lot of times to close in an LLC, meaning Private Money Lender LLC closes to John Doe LLC, which makes it an easier process in case of any default, and they're able to mitigate their risk this way instead of trying to default on a loan, going through all the issues going around the homestead rules and laws and so on and so forth. So just bear in mind that if you're considering doing private money lending, it's best to have your LLC ready, best to have all the members of your LLC, make a team, have your contractor, have a realtor if you're doing fix and flip, so a realtor could advise you if this will sell in a timely manner or maybe move on to another property that will be able to sell faster. So do your due diligence, do your homework, and I'm telling you, private money lending, there's a lot of it available, especially in South Florida, and search for the property. So the type of properties that a private money lender will typically lend to are single family residence, okay? Single family residence, multi-units, apartment buildings, condos, shopping malls, land, not so much. It all depends on the area. It all depends. There's a lot of restriction on lending on land. So mostly properties that are secure with a real estate building. Okay? Private money lending is largely equity driven, meaning the value of the property has to make sense for the lender. So typically, if you have a property that's worth, let's say, $100,000, and there's $90,000 worth of mortgages on it, that means you only have 10% of equity, $10,000. That may not work for a private money lending company, but if there's a different scenario where a property is worth $100,000 and there is $50,000 worth of loans, or the cost of the acquisition of the property is $50,000, that might work for a private money lender, because then you have 50% worth of equity in case of default or anything. It's easy for the private money lender to secure their funds. So think of it as doing a deal with somebody you know. They want to make sure it's mutually beneficial to both sides. And of course, when you're in the lending, they want to mitigate their risk. So they want to make sure there's enough equity in the property. Okay? How do you know how much equity is in a said property? A lot of people like to go on Zillow, Realty Track, Realtor.com to kind of see the value of a property. And oftentimes it comes in pretty close. But to get a definite number on what a property is worth, it's best to secure a licensed appraiser to appraise the property to see what its value. Oftentimes the private money lender is gonna be the one to choose the appraiser. They're gonna be the one to choose the appraiser because they think that that's the way they'll get a more accurate reading of the value of the property. Now, you as an investor, you want to make sure that you do an inspection on the property, and that will tell you how much work you need to do to get the property in a nice, marketable condition if the property does need work. So getting an inspector, they'll give you a cost estimate of all your repairs that need to be done to the property to make it marketable, to get the top dollar for what that area is selling for. So they'll recommend things like changing the windows, maybe changing the roof and so on. They'll tell you when the AC was installed. So the overall inspection will give you a general health of the property and what needs to be done to get the property in top shape. Okay? So based on what we discussed here, private money lending oftentimes work for wholesale properties. And with wholesale properties that are not normally on the MLS, the multiple listing system, they're normally off-market properties. Let's say somebody have a divorce, somebody is going through foreclosure, these are going up for auction, or oftentimes you see them in your community. That one house where the grass is overgrown, there's like cobwebs everywhere in the door, and nobody knows what's happening with the property. These are oftentimes good opportunity to go around, see what happened, ask the neighbors questions, who used to live there, what's happening, and try to secure these properties, because oftentimes they're going for pennies on the dollar. So these are the type of properties that investors would secure private money lending for. Okay, so it's not the traditional type of properties that you see listed with realtors and so on, because those are being sold at market value. So these really work for wholesale properties that are sold on the market value. So it's a good deal for you, and it's also a good deal and a safe deal for the private money lender. I'm glad I'm able to share some information. Hopefully someone out there benefited from this information, and I'll be back to share more information on the mortgage industry and what you can do to build your real estate portfolio properly. Okay, if you have questions, comments, please let us know, and whatever knowledge we have and then we can share, we'll be happy to do so. So until next time, thank you for joining us. Thank you for listening.